Welcome back, traders Mpumi and Co. I'm back from hibernation. Happy 2025. I've not been here. I've been working on a lot, bro. I've been developing my website. I've been doing a lot. There's a free trading ebook for all my traders who want to improve or who want to start learning how to trade this year the right way. There's the wrong way of starting how to trade, which I'll discuss later on the year. Guys, this year I'm not going to have filters. I'm going to give you straight facts raw. And I'm going to supply you with evidence based on my trading accounts. So right now I'm growing a small account, which I'm documenting. You're going to see all those trades like I did last year. But last year we did it with the demo account, remember? This year I'm going to do it with the real account. Because I know there's some of you going to be like, I only was able to do that because it was... Try it. Try it. And I'm going to show you that I'm going to do it with the real account, right? Like I said, that's also trading my real account. Trading my real account, but I'm not going to show y'all my personal real account. So I'm going to make y'all an account and I'm going to show you how to flip it to cater for the mass audience, right? So guys, what are candlesticks? Candlesticks have been here since the 16th century, right? The origins date back to the 16th century, but they were later developed in the 18th century. And those developments are the same principles in which us technical traders apply today. So what does this tell us about candlesticks? Candlesticks are very powerful indicators, signals, and a chart that you can use in order to be a profitable trader. And I'm going to show you why. And I'm also going to go through a brief history on candlesticks, right? I'm just going to go through a brief history. And I'm going to show you what's the uniqueness of candlesticks and why we use candlesticks. And later, I'm going to give you 4 powerful trading patterns in which I use for my setups and which I've been using in my previous market breakdowns. Market breakdowns are going to also start soon, man. So, guys, without further wasting time, let's jump straight into it. So, fast forward to today, and the same candlestick patterns like the doji, the hammer, and the engulfing pattern are still helping traders make informed decisions. So guys, like I stated, candlesticks, guys, were literally first developed in the 18th century by a person or a guy called Munishia Homa. I don't know if I'm pronouncing it right, but excuse me. Munishia Homa was literally, guys, a legendary Japanese rice trader, guys. This guy was impeccable, bro. History has it that this guy has over 100 successful back-to-back trades, bro. That's crazy. Yo, that's crazy. So, anyways, he is a legendary Japanese rice trader, guys. Because back then, in the 18th century, rice was more than just food, guys. It was literally just more than just food. It was a major economic driver in Japan. Bro, rice had value, bro. Rice had value more than any other commodity during that time, right? To a point that even Munishia Homa was appointed to a samurai status by the elites at that time. That's how important rice was, and he was the best rice trader at that time. You see? So Homer's innovation wasn't just about tracking price movements. He also factored in human emotions like greed and fear. Like I've covered in my website. Like I said, you can get your free ebook and you can head on to my website and go read. You can learn more about greed and fear, right? So he used that to study greed and fear too. Right? So these emotions, greed and fear, combined with supply and demand, shape market behavior. And candlesticks give traders a visual way to interpret the market back then until now. So fast forward to today, and the same candlestick patterns like the doji, the hammer, and the engulfing pattern are still helping traders make informed decisions. Now, what exactly is a candlestick, guys? So think of it as a language of the market. Each candlestick represents price movement over a specific time frame, right? So we have different types of time frames: 4 hours, 1 hour, 30 minutes, right? So here's what a candlestick tells you. So basically a candlestick tells you the opening price, the closing price, the highest price and the lowest price of that candlestick, right? So you're gonna just go through that real quick. Then we'll look at the 4 most powerful patterns which traders can use to kill the market. And it's simple strategy, guys. That's pretty simple. But let's look at the anatomy quick. So as you can see, we're going to be diagnosing this candlestick over here. This candlestick over here, right? So this candlestick, as you can see, gives us the open. So this is a candlestick from the daily. So it opened here and it closed here. And when we zoom in, let's say, oh my word, what am I doing? Let me take that out quickly. So it basically tells us the opening of a candlestick and the close, so we know exactly where the candlestick opened and when closed. So on this particular day, the 7th of May, as you can see below, down at the screen there, 2024. So we can see on this specific day the market was bullish and buyers were in control of the market on that particular day. So the highest point of the market is basically this. This is the lowest the market went right after the open. So at the open, the lowest is at this wick over here. That's the lowest point, but the buyers managed to push the market up, said no sellers, we are not going there, and it managed to close way above that, right? Way above that. And as you can see here, the sellers wanted to go above, but the buyers wanted to go above, but then the sellers were like, no, hold your horses. Then it managed to push down prices, and that's why we have a close here. But the highest point was up there at the point of the wick. The lower, you see the wicks, these are wicks right here. These are wicks. So now we're gonna look at 4 powerful patterns, right, guys? So the first pattern we're gonna be looking at is a bullish engulfing pattern. So let me delete this. Delete. We have covered the anatomy of a candlestick, and likewise, man, also for sells, guys. Also for sells is the same thing. It's the same principle. Let's diagnose which candlestick. This one. Yeah, let's look at that one. So we have the open here at the top. The market opened here and it closed below. Right, then we have the wicks to indicate the highest and the lowest point of the market. So a bullish engulfing pattern consists of 2 candlesticks, right? And they must always think of these patterns as either a reversal pattern or a continuation pattern. That's the law, reversal or continuation, and it must occur on either the support of a trend or at the support of a zone. As you can see, we have a nice beautiful zone over here, zonal structure over here. So we have a bullish engulfing pattern forming, and it consists of 2 candlesticks, right? These candlesticks over here, let me just try and highlight them quickly. These 2 beautiful candlesticks right here. I'm trying to speak like a rump, but anyways, you see you have 2 candlesticks. So the first candlestick is a bearish candlestick, signaling to us that the sellers are still in control of the market, right? But they're losing power of the market. So this tells us as technical traders that it's about time to look for reversals, and we're looking to go up. But before we do that, we need to wait for one more additional candlestick, which is candlestick number 2, to see how it forms. And we can see that this candlestick fully engulfs the first candlestick, and that's a clear sign of a bullish engulfing pattern, and therefore the market bought. And after that confirmation, people like moi who spotted these with ease, we are up. We've eaten this trade. It's like, bro, we done. We killed it. Easy, because we follow flipping simple rules. Learn to follow rules, guys. Right? So now let's look at a bearish engulfing pattern. And a bearish engulfing pattern consists of 2 candlesticks, right? The first candlestick is a bullish candlestick that is losing power. The second candlestick is much bigger than the bullish candlestick, and it indicates that the sellers are now taking control of the market, right? Therefore, we had this candlestick approaching the resistance. So also a bearish candlestick always occurs on the resistance, right? Either the resistance trend or the resistance zone, right? So we had this blue candlestick, and this candlestick, as you can see, it fully engulfed this candlestick, right? Therefore, would have been nice selling opportunities here too, right? Nice, beautiful selling opportunities right here, right here. Cool, beautiful. You see how it works? Let's go back. You see how a bullish engulfing works? And as you can see, the market broke, right? And I told you can eat it for a continuation. So a continuation, market broke, market pushed back. As you can see, we had two candlesticks. Let's use these, the latest ones. We had a candlestick here, and this one engulfs this candlestick, and we are up. It's time. Clean entry, sniper entries. This is how I get my sniper entries, in case for those who are wondering. This is how I get my snipers, my boy. No, this is how I get me sniper entries, literally. Now we're gonna be looking at, so we've covered two patterns, the bullish engulfing and the bearish. Now we're gonna be covering morning star, and we're going to be covering evening star patterns. Those are the other patterns that I use. Sorry for the noise, man. The dogs are having a war. It's like Trump in South Africa, or Trump against the world, man. You getting a tariff. Everybody's getting a tariff. Ooh, my uncle. So guys, an evening pattern consists of 3 candlesticks, right? The second candlestick can either be bullish or bearish, but they all tell a story. So let's look at here. So an evening star, a morning star, is a bullish reversal pattern or a continuation pattern like the bullish engulfing. But instead of having only 2 candlesticks forming, we have 3 candlesticks that form in a particular fashion. So as you can see, the first candlestick indicates to the buyers that as the candlestick makes its way to the support is our first indication that we are looking for reversals, but we need candlestick confirmations. So we have, first is the red, which symbolizes that sellers are still in power. Cool, we would have not even intervened there. Then we had a bullish candlestick, the second candlestick is a bullish, which can also be a bearish candlestick, right? As you can see, it shows us that the sellers have weakened. Therefore it looks like buyers are coming in. And we had the third candlestick, which fully engulfs the first candlestick, and that was a clear sign of a morning star pattern, and we would have capitalized on that pattern right there. Simple, guys, simple. And if you want to go read about this, I will have it in my website linked below. Go check it out. And there's more content, like always, there's more content for you guys to read about how our global system works and trading, and a whole lot of information for beginner and traders who actually want to follow a simple strategy to being a profitable trader. If you don't want to follow a simple strategy, then this is not for you, guys. This channel is literally not for you. But anyways, that's basically it. Now what we're going to be doing is we're going to be looking at an evening star, which is our final pattern. These are literally the only patterns I look for in the market. I don't look for, there's a lot of candlestick patterns that you can use. You can go and research those, guys, if you want to, right? So now we're going to look at an evening star. Similarly, whatever. My tongue is not tonguing right now. But anyways. Okay, anyways. So, evening pattern occurs on the resistance zone or the resistance trend. So here we can already see we are at this is a very high probability sell, guys. This is if you bought your high corner, I don't know. You need to work on your thingy, your support and resistance, which I also cover. And you can see also at my market breakdowns to see where you stand versus my setups. You can go check that out. So market breakdowns will start next week. So we have a resistance. So resistance areas we sell, right? So we're gonna be looking for patterns such as the evening before we place in our opportunities, right? Because we want perfect entries into the market. That's how we avoid all this nonsense that occurs in the market, right? So the first candlestick indicates a bullish candlestick, a very strong bullish candlestick, which indicates that buyers are still in control of the market. Second candlestick can either be a bearish or a bullish, and in this instance it's a bullish, and it's smaller than the first candlestick, showing that the buyers are losing power. The third candlestick is a bearish candlestick, which fully engulfs the second and the first candlestick, showing us that the sellers are here. The smart money is here. It's time to join them, or else you're missing them. You're missing them. So guys, let me know how many of these patterns can you spot. Go try it out. Go try and spot them out. Go test it out. Go back in time and go spot them out. And that's basically it, right? So there you have it, guys. And guys, you need to also keep in mind that candlesticks don't work in isolation. You need a strategy behind it. Like you saw, I use trends, I use zones to also support those candlestick patterns. You should have something similar to that, so that you can have a full picture, and so that you can see opportunities or market shifts that other traders miss. All right. So stick around if you want to learn more. I have a trading ebook in terms of mental shifts, 5 mental shifts. The ebook is down below. And I also have an official website. I've been saying this throughout. You can go read, guys. I'm always going to be repeating this so that you can get it through your skull, that reading actually helps you know more and more, right? So this year I'm gonna be covering a whole lot of topics. I'm gonna be diving into discussions that traders don't want to go into, right? Because it is it's the truth. I'm gonna go into a lot of truth, so I don't care about the criticism. I'm just gonna be giving everybody who wants to learn the hard truth, so that everybody can build on this strategy or learn. And if you want to be a part of all this, make sure to like, subscribe, and hit that notification bell. Boomy and Co. Till next time.